Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso. We just wrapped up our interview with Sean Dempsey, and this is an interesting one because Sean is, again, not a client of ours, right? He has been working with an individual, Tim Boyle, and Tim is passionate about infinite banking, and he's actually coming on as one of our coaches. We're this close to introducing him to you guys, to our listeners. And Sean has a great story. Tim and him been working together for a while, like we mentioned. And man, Sean was nice enough to take time out of his day to spend it with us and kind of share his experience on infinite banking and the work that him and Tim have been doing over the years. So we're super excited to have this out and get you guys introduced to both Sean and Tim. Anthony, is there a takeaway or two that you had from today's interview?
Yes, it's always great to hear infinite banking from a client's perspective as opposed to an agent's perspective. And he had shared a couple examples of what he's done with this policy. And one, when he bought a lobster boat along with the captain. Now, he didn't buy the captain, but the business included a captain. And what he had talked about is there was an opportunity to buy this boat at a great price. And I feel like most great opportunities, the bigger the opportunity, the smaller the window to take advantage of it before somebody else does. And because of infinite banking, he was able to have access to the capital. So when this opportunity came, he was able to take advantage of it quickly before anybody else. And he also shared how infinite banking has allowed him to take advantage of opportunities that were not allowed to him when he had his money all locked up. Cam, what were some takeaways that you had?
Man, this guy was just a wealth of knowledge, right? And there's three things that he mentioned that really jumped out at me. This is stuff that we've talked about over the years in our podcast, but this guy's actually doing them, right? He's implementing. The biggest one that was a takeaway for me is he has kind of an investors community where these guys are meeting monthly, right? Yeah. And talking about infinite banking and not just surface level stuff, right? He shared with us some of the concepts and ideas that they're talking about briefly on the show, but even before and after, he's talking about some of the conversations that these guys are diving into the weeds and kind of getting into the meat and potatoes of infinite banking. Really, really good. And then the other two things I asked him kind of what he would share with someone that was new to infinite banking, and he hit two of my favorite ideas: economic value added, and then he touched on the airplane example. So really, really good information again from Sean. Again, this guy's got nothing to gain from this. Yeah. He's just here kind of sharing his story. And it's kind of twofold for us. One is we have a great practitioner of infinite banking. And number two is this is kind of our leeway or introduction into introducing you guys to Tim and some of the work that he's been doing over the years. And we'll be showcasing him as we move forward. So hope you guys enjoy this interview. Again, a client interview. And he's going to be sharing some of the ways that he's been using infinite banking over the years.
Enjoy the episode.
Take care. If you're an investor or want to be an investor and you're looking to create passive income that exceeds your monthly expenses, then this is the podcast for you. Here on the Infinite Wealth Podcast, we combine the philosophies of Robert Kiyosaki's Rich Dad Poor Dad, along with Nelson Nash's infinite banking concept. Welcome to the Infinite Wealth Podcast. I'm Cameron Christensen, along with our co-host Anthony Faso, and we are excited today because we are going to welcome Sean Dempsey to the show. And I must say this before we welcome him, is I want to be really clear, is that we've invited Sean on the show, but I will say that he's not my client nor yours. Mm-hmm. He is actually a good friend of ours, Tim Boyle, and Tim is actually coming on as one of our coaches. So Tim has a phenomenal understanding of infinite banking. He's been doing it for a very long time. He's a student and practitioner, and him and Sean have been working together for quite a while. And so I want to be clear that all accolades and all credit is going to go to Tim Boyle. Right?
And blame.
But I just want to throw that out there because we're going to be introducing you guys to Tim here soon. But today is not about Tim. And surprisingly, it's not about you either, Anthony. It is about Sean Dempsey. Sean, welcome to the show.
Oh, it's great to be here, guys. Thanks so much for having me.
Absolutely. I'm going to throw it to you. Sean, tell us a little bit about your background here.
Sure thing. Well, first and foremost, before getting even into that, I just wanted to say thank you so much. You guys are personal heroes of mine, and I've been listening to you for quite some time. Like I mentioned to you before the episode started, I've been opining in every now and then with an email or a comment, and it's good to finally meet you or at least not in person, but over the airwaves here. So my background is, and I think hopefully I'll try to make this somewhat interesting. I know I find IBC extremely fascinating. I've been practicing it for many years, and I thought I'd just kind of fill the gaps in terms of what I've been doing for the last, say, 12, 13 years. So my background is I moved to New Hampshire 14 years ago. And I got involved in a traditional 9-to-5 job, cut my teeth in the insurance game. And as you might imagine, it was not so fun. So I really, I fell down and I really realized that this was not the experience for me that I was very excited about. So what I did is I started getting involved with Tim Boyle, like you mentioned. So I've known Tim for many years. He demonstrated what whole life insurance was all about, something I didn't have a lot of visibility to. He turned me on to Nelson Nash. He got me to read what I think has become the second most profound book in my life, which is, I'm holding up. I know this is not a video format, but I will tell you, I'm holding up the book, Becoming Your Own Banker by Nelson Nash, which is the second most important book next to NIV Bible for me. One gives me, I would say, my salvation from a moral perspective, or from my mortal soul. Becoming Your Own Banker by Nelson Nash has really proven to be my financial salvation. And it is very similar to the Bible. I will put it this way. It kind of, when you read it, you have no option but to completely turn your life around. There's no reading it and just moving on and going to the next step. When you read Becoming Your Own Banker, it is a complete paradigm shift, a complete change of everything you know about finance, about how you want to go through your life, how you want to experience financial freedom. And to me, after reading this book and a couple others, I would throw Richest Man in Babylon as one of them, as well as Rich Dad Poor Dad. It completely transformed me from the inside out. And it kind of changed the way that I view the world. It changed the way that I want to see my life unfold. And that was very profound for me. So when I moved to New Hampshire, I realized, like I said, very quickly after joining a behemoth company here, that life wasn't what I had been promised, I should say. When you think about, you go to school, you go to college, you go to get your next job, and then you get family and whatever else. What to me made this kind of a paradigm shift that I was really excited about is I wanted to, after reading this book, look into what passive income streams could afford me. And there's ways to do this that through Becoming Your Own Banker that weren't afforded to me through your traditional 9-to-5 job.
Can you unpack that, Sean?
Yeah. So I guess to get into some of the specifics here. So I'm going to assume, for the sake of this conversation, I think you got to start somewhere, that people have either read the book or are familiar with IBC. And I think if we don't start there, I'm going to be unpacking concepts that hopefully have been communicated many times. So basically, having opportunities afforded to you through having a nest egg that isn't tied up in some rainbow and there's pot at the end of the rainbow, I should say, some nebulous concept like not to swear on the show, but on a 401k or qualified plans. These are dirty words that I don't like to use, where your money sits in financial purgatory. Having access to capital to do things that, for me, allowed me to start a business, buy a business, put money into products that I never would have possibly considered. I think that the IBC program allows those opportunities in a way that it opens doors that would never before be available.
I agree, Sean. Infinite banking will absolutely change your perspective How were you first introduced? I mean, was it Tim or, what was it?
Yeah, I think it was Tim. So Tim and I used to sit down and talk about what excited us. Some of on the political spectrum, we'd get really into the libertarian ideology, and we'd throw ideas around about freedom and liberty here in the U.S. And that transitioned very quickly into freedom and liberty and the financial side of things. And so he introduced me to IBC, had me read the book, and we really started brainstorming together on how we could kind of crack the code of getting more involved and taking on responsibility in our own lives. So we would we would sit down and have whiskey and politics and IBC night, where we'd just chat about concepts related to infinite banking, well into the night. I mean, I'd have had conversations with Tim and others where we just look at the clock, and before we know it, it's 3 a.m. and we've been talking about riders on our policy and how to reinvest back in ourselves. And it's very nebulous concepts to most people, but we geek out on them. We would actually have these debates between ourselves. For example, we went back and forth for almost a month on a concept or a point that Nelson Nash made in his book, which was basically after you've put money into a policy, is it better to, when you're taking a loan, is it better to pay back that loan at a higher rate of interest than what you find at a bank, which what he talks about in the book. So you're basically paying yourself back through lump sum payments or buying up additional paid up insurance? Or is it better to basically accumulate cash and pay that back to yourself in lump sums, instead of through paid up insurance, but through lump sum payments and things of that nature? And we go back and forth on some of these concepts that were, again, very high level, very in the weeds, but we would have basically debates over these very esoteric concepts that people would, like my wife would, basically be bored to tears when I tried to. But we found it fun.
Sean, I got to make a point here. Is one, that's what whiskey will do.
Yeah.
And then two is that it's kind of unique. It sounds like your inner circle was familiar or really embracing infinite banking. And what I would say is I don't think that's typical of most people. I feel like, at least that wasn't my experience. My experience was I came across infinite banking. Nobody knew kind of what was going on or what I was talking about. And so I felt like I kind of had to go it alone. I'm hearing something different. Is that true?
Absolutely. I think that one of the most important things about any important aspect of one's life is getting plugged in to a community and talk through difficult topics. Since the conversations with Tim and I and with whiskey induced and what have you, we've actually opened this up to a much larger group. We actually call it the Investor Club or the Investor Guild, just to put a funny word on it. And we'll meet up and we'll once a week or once a month, and we'll just talk through whether or not we want to, what various concepts and spitball ideas and bounce ideas off of each other, from investing in real estate to investing in managed funds to how do we use our infinite banking policies most effectively. We'll talk through concepts like internal rate of return versus ROI. How does these make the most sense, or cash on cash return? So we want to really talk through like the really nuanced, in the weeds topics that, again, really are the nuts and bolts of any investment decision. And so having a community, to answer your question, that you can really roll with and pit ideas against is so invaluable, because if you don't have that, you're constantly just internalizing ideas and they're not going anywhere.
Man, what I love there is that that's one of the things that Nelson prescribes.
Yeah.
Is at the end of the book, right? Is he kind of summarizes some of the stuff. And one of the things that he says is, hey, go out there, spread the word, and start a group, right? Start a community of individuals. And that's what you guys have done. How big is your group now?
Last session, well, oscillates back and forth, but last group we had about 10 people there. And before that, we got as many as 15. So it's growing. We're actually playing with the idea of taking all these concepts and actually pooling money together and turning it into something that we're all putting, an investment in, put some skin in the game altogether. But right now, it's simply just a concept or just a group for us throwing ideas against the wall. But in terms of your point, though, I completely agree. I think that being an IBC practitioner almost by default makes you into an IBC evangelist.
Yeah.
And because, I brought up the Bible earlier, I think that, you don't want to hide your light under a bushel. You want to, once you see it work for yourself, once you see the power of IBC, you want to share it with the world. I would not, and I can say this with all sincerity, I would not be where I am today if it was not for Nelson Nash and the concepts in his book. And that's why I really do. It's not with tongue in cheek that I hold it up against the Bible and say that, man, this is a framework and a way of living that is going to completely rock your world. And if you read this book and you do not walk away changed by it, because it's a complete teardown of everything that society tells you about managing your money and going into, and living your life, essentially. Again, the first 4 chapters, as you guys well know, is all about how to change your way of thinking. And that's just so important. And that's what made such a big impact on me, is it wasn't just another set it and forget it scheme. It wasn't just, just buy this product, do this thing, and then don't have to worry about it. That's why I hate, well, I'm not insulting anyone on this call, but I hate financial advisors, because it's just all about, give your money to me, don't worry about it, walk away, go live your life, and hey, when you retire, well, you'll have a pot of gold for you. What I love about IBC is it puts the banking function back in your own hands, and it makes you a master of your own destiny. And that's one of the reasons why I think I'm a diehard IBC evangelist for that respect. I will fight for the tenets that are espoused in this book, because I think they're so invaluable, and I think that everyone should use it. And very similar to like the gospel message, is you can spread it, but you're not gonna have everyone pick it up. It's fun, it's kind of interesting. It's like it only resonates with the remnant. Maybe 5-10% of people are actually going to pick up the message and leverage its concepts. It's almost like it doesn't seep in, and that's something that that's probably the biggest struggle that I have with IBC, is like, I'm so passionate about a topic that's so esoteric and so confusing that even if you spend an hour on it, it's like you'll walk away and you don't know if you made any headway with the person you're talking to. It's not like it's not like Kramer on MSNBC or CNBC, where he's just talking about a hot stock that's going to rocket to the moon, or it's not even crypto, where you're speculating on something that is just could not be a moonshot. This is something that requires a complete teardown of your way of thinking and the way that you exercise your financial well-being.
Yeah, I think sometimes people act more like Kramer from Seinfeld, right? Or they walk in the room just all disheveled. But oftentimes we've talked about this, that infinite banking can't be taught; it only gets caught. And sometimes we get frustrated as well, Sean. We're show these investors like mathematically doing this, and this is why this will work. But sometimes people don't. They're just not open to the idea.
What I don't know if you're done, but I don't care. What I would add to that is Sean kind of being in our role, as we've been doing this for a while, is that I often see a lot of times people will approach infinite banking and they introduce to it, and then they put it on the back shelf, the back burner for a while, and then they always kind of circle back around to it. And so we just had a client that I was pretty excited to bring on, because again, it was an example of a gentleman calling maybe a year and a half, almost 2 years ago, asked us every question in the book, and we did not end up working together. And I'm like, man, like how did that not happen? And then he calls up, several weeks ago and was like, you know what, I'm ready to move forward now. And so oftentimes we do see that. So I appreciate that sentiment. 2 things I'm going to ask you, Sean. One is that you've referenced the book a lot. Do you have a favorite page or a favorite concept in there? And then once you answer that, I look forward to kind of diving into some of the ways that you've been using infinite banking over the years.
Sure. Yeah, you actually had a great episode about this probably 3-4 weeks ago, where you kind of went through your top 3, top 5 favorite.
All right, let's see.
I know you were zinging each other. I know, Anthony, you came up with 6 to the table instead of 5 that you were supposed to. I thought that was very sneaky. But I think I would answer that economic value add was probably where a concept that really kind of was rediscovered. And he talks about how this is something that people, opportunity cost is something that people have factored in for hundreds of years, but then they kind of forgot about it conveniently, and now it's back on the table. And he kind of brings that up as something that's extremely important. And then the other thing that really, I think, slaps you across the face in the book, at least is in one of the first couple chapters, where he talks about you can be flying in an airplane, right, and going 200 miles an hour, but if the headwind is going 300 miles an hour against you, it'd be better if you just landed the airplane and wait for the wind to go away. And then he talks about, hey, well, what about if you actually get in the air and you have now a tailwind going with you, and you have 300 mile per hour tailwind plus your 200 mile per hour speed. Now you're going 500 miles. And it gets even better than that. And he's like, well, that doesn't stop there, right? Now, what if you factor in that everyone else is going, negative, going because of their headwind, they're going negative 200 miles per hour. They never landed the plane. They're going actually in reverse. Well, now you got to consider your position relative to them. So I think this is the concept that to me really clicked, that it was like, all right, IBC is what allows people not just to, because you got to compare yourself to where other people are doing. Other people are putting their money in 401ks. They're putting their money in qualified plans. They're trying to worry about the interest they're getting on the pittance of their savings, instead of focusing on the entire volume of the cash flow. And these are the concepts that I think once you truly get, that doesn't just put you, head and shoulders above your competition. It puts you miles ahead of them, so that you're in a whole other league. And I was really blown away by those particular concepts. I think those resonated with me the most.
Sean, I'm impressed, man. You are a student of infinite banking.
Yeah.
Rattled off 2 great concepts there. Well done.
Yeah, absolutely. And then, so yeah, you had a couple questions about how I'm happy to get into the nuts and bolts of how I'm specifically using it. I think that might be maybe of particular interest to some of your listeners, or certainly have an interesting background when it comes to what I've been putting the money to over the last couple years.
Yeah, let's get into it, man. Let's share maybe 2 or 3 or something that kind of jumps out at you that you've done in the last 14, 15 years or so.
Yeah, and again, I think it needs to be said, even though it's kind of an infantile part of the understanding of the concept, is like, you don't jump into a gym and just hit up 500-pound bench presses, right? You got to start from somewhere and start small and work up to it. And I think that's what's so critical about IBC is, again, it's not a tool, it's a process. And so like what I was doing when I first started allowed me to then build on that success cumulatively over a period of time. So anyway, that being said, I think that's a really important caveat. Over the last couple of years, I've been very fortunate in that I've been taking my winning, or my say windfalls from various business dealings early on, and been throwing it into the policy. Every time there's a slight windfall, like a business dealing, whatever, where did it go? Right into the policy, right into my savings account, which is my IBC set of policies. And so from there, once I built up a nest egg in my policy structure, some of the more interesting things I've been able to do in the last, say, 3-4 years, which I think is kind of fun, is let's see. One of them is just a year and a half ago. I went out on a whim, and again, this is much more on the speculative front, so I don't want to give any impression that everyone should be doing this. But I had some money sitting there, and I came up across, afforded an opportunity to work with somebody who I knew for a long time, and we were grabbing beers, and we were just talking about our passions for what we love to do in our free time. And he surprised me, and he goes, "Sean, if I had my druthers, I'd be out on the ocean all day long fishing for lobster." And he's like, "That's my dream." He was in construction. This guy, would not expect to be a weathered fisherman. But it turns out he'd been going out there as an individual, just baiting these, couple of traps. And he said, well, my lifelong dream is to be a lobsterman. And so, my head started, well, I asked him some obvious follow-up questions like, is there money in lobster? And there is, right? And so without going and boring you to tears, I would say that we went into the numbers together, and I was like very intrigued at what you could put into the business and what you could get out in terms of profit. And so I said, hey man, I'll take a flyer on this. What if I bought a lobster boat, which aren't cheap, by the way, for upwards of $150,000. And I say, and you're the captain, and let's split the money in a way that we find fair. We inked an agreement on the back of a cocktail napkin in a bar. And so that's what I did. Next day, I call up my insurance agent, ask for a loan, and I had the money in my account literally the next day. And
wait, Sean, when they took that call, did they run your credit check?
They didn't ask me what it was for. Nor did I volunteer it, because I didn't want to be. Obviously, been dealing with these guys for a while. My insurance company, and I didn't want to have a 20-minute conversation about you're doing what now. But that's what, again, one of the best things about IBC and whole life in general is when you need money, they don't ask you what's it for. They don't ask you when you're going to pay it back. They don't ask you any questions whatsoever. They say, well, they ask you what bank account do you want it in. And I had the money the next day, and I bought a boat with that week. And there's, believe it or not, success, at least so far, a success story to that, or there's success to that story, and that it is now producing cash flow that is quite significant, upwards of $5,000-$6,000 a week. That's revenue, not profit, but from lobster fishing. And I would not have been able to take. By the way, I should mention that opportunity to buy that boat was like once in a life opportunity, because it was a top of the line boat. It was only available. It was apparently, again, I don't know anything about boats to save my life, but my friend did, and so he said, "This, I'm telling you, man, I've been in this industry. I've been following this for decades, and this boat is going to be. You're not going to be able to buy this after tomorrow. It's going to be gone. You got to take advantage of this opportunity now." And so the fact that I had the ability to put money on an opportunity that was very fleeting in a way that probably few people did allowed me to take advantage of an opportunity like that. And I think that I know that IBC has success stories like this in abundance, and that very few people can just call up, and get that kind of money that quickly. If you're not involved in IBC, even I had the money in, say, a 401k or in the money market or something like that. It's like there's not the same level of fluid liquidity and no questions asked. I mean, I certainly couldn't get a loan for working with a bank officer on that would be fun. That was one of the more recent ones that I did, and like I said, it's reaping some rewards. I'm not saying it's all been roses and fairy dust. It's certainly been a fun journey. I actually went out there on the lobster boat several times, and I'll tell you guys, I do not have my sea legs like I thought I did.
Wow. I can't imagine. Did you get sick?
I did. He called me a landlubber, and it spoiled our friendship a little bit. But I realized very quickly that it's not so much the rocking the boat actually got me. It's the dead fish that's spraying in your face. As you got to bait the cages. And I lasted about 5 hours, which was longer than I thought I might. But I was then at the end. I was blue in the face and puking over the side of the boat on the way in. So. It was. I'm not meant to be a lobster boat captain, but I am meant to finance the deals that make these sort of opportunities happen. So that was
that's
awesome. In addition to that, I mean, again, just having the policy structure in place has afforded me the ability to buy real estate. I went in with two other guys from the investor club I was mentioning. We each put in about. I don't know if I should mention amounts on the. We all put in a significant amount of money that we got access to. They had gotten the money from crypto. They did quite well in the crypto world. I wasn't so lucky, but I pulled out my policy. We went in together on a real estate deal. We're now Airbnb-ing that, And it is incredibly lucrative. It's a beach house in Milton, New Hampshire. So I've been able to take advantage of real estate opportunities. I've been able to buy businesses. I've been able to buy out partners in businesses that I own. Again, just IBC has opened up doors that would be otherwise completely unavailable to me. I've invested in managed funds for ATMs. I think I don't know if that was on your podcast or another one where you had discussing again a lot of passive income stream potential that can come about from that IBC affords. And I always emphasize passive income streams above active ones. So ATMs were very interesting to me. I've also invested in oil and gas using my IBC policies. So, I mean, these are just not to just give a laundry list, but these are all things that I didn't do all at once. Again, this is over a course of multiple years, but without having the IBC policies and the structured in the way that the paradigm permits, these opportunities wouldn't be available. And I think that is the most important thing to be noted about being an IBC practitioner.
Sean, why? So what I'm hearing is you're investing using policy loans. Why do that as opposed to just paying cash?
You're giving me a layup here, huh?
Well, you know what? I'm just curious to hear your perspective of that answer.
Well, I answered it earlier when I said, the value add, economic value add or opportunity cost. I'll just quote Nelson Nash, you finance everything you do, right? And when you pay in cash, you're financing it through the opportunity of missed investment. And so if you what I would call, we choose the words, Tim and I, when we talk about this stuff, when we funnel an investment through your IBC policy, you're making it into an and asset. I think those are probably actually your words, Anthony. I like that. I've probably used that before. But you're taking something that if you were to use cash, you're sucking all your cash away, and that cash is gone. It's no longer, in your money market. It's no longer in your bank account. And you now have traded one asset, a bunch of cash for another. When you funnel things through your IBC policies, you're now borrowing against an asset that continues to cumulatively appreciate through the dividends and the interest, the guaranteed rate of return of that structure, and you're getting the asset as well. So yes, you have a loan sitting against that death benefit, but let the cash flow from the investment pay down that loan. And so now, in a year, 2 years, 5 years, depending on the investment, you'll pay off the loan, and now you have two assets sitting there, right? So using cash, and again, I know these are, for folks who've been doing this for a while, I think, again, it's a layup, but it never hurts to hear the message given out over and over again. But paying cash for me, is one of the silliest ways of dying an investment. You want to have it go through your policies, your structures of policies. Otherwise, you're just giving up huge amount of opportunity and growth on your net wealth.
Sean, again, it's exciting to see another Christian excited about infinite banking. How's it been bringing this idea to your family, right? Your wife, right? I don't know if you have kids or not, but how's that been? Have you been able to communicate that message?
My immediate family, absolutely. In fact, my wife is a IBC practitioner herself. We use our policies exclusively for business, but we did make the one exception when we bought our primary home. We used her policy to take out some of the money for the down payment, which again was great. I have policies on my wife. I have policies on my daughter. I have a 7-year-old daughter. And again, you're using the medium of insurance to basically create a reservoir for your funds. With extended family, I haven't been quite so lucky. I get around Thanksgiving and Christmas dinner, and I'll talk their ear off, and they're just like, "Oh my God, not again." But again, if you're going to be an evangelist, sometimes it's going to resonate. Sometimes those seeds are going to fall amongst the thicket. Other times they're going to germinate, and you never know I think you brought this up earlier, when you kind of, plant that seed and maybe it doesn't come up for many, many years. Maybe it finally just clicks for them. Like, oh, now I get it. Those other 800 times that you were talking about it, they didn't resonate, but now that 801st time, now it's finally sinking in. So I'm going to continue to preach, the IBC philosophy to my friends and family, and those that decide to take advantage of it. I think it's great. It's only hurting them, honestly, not doing it. But I do understand. I'm not naive to the fact that it is a difficult concept. Anyone that says IBC is easy to understand, I think, is fooling themselves. It is not a intuitive concept. It really requires you to change the way that you think, to change your paradigms, change your philosophy, change the way that you just think about finance. So that is probably the biggest con of, in terms of a pro-con relationship, not that it is a con, of IBC. I think that it's you do have to spend those diligent and creative conversations with family and friends and those that are going to be receptive to the idea. And you got to be patient with them, like answering these questions over and over again. Like even the layups, like, why should I pay cash? Why shouldn't I pay cash? Why should I pay interest on my own money? These are the kind of concepts or questions that are come up again and again. You're going to just have to answer them over and over again. Just like as a libertarian, I constantly have to answer, why, who will build the roads, if there's no government. So, I mean, like, it's the same sort of questions that you just need to basically know the material well enough to be able to speak to it.
Sean, I think key thing you said is that you got to have some patience and time, because as you explain things, like it took me a while to explain to Cameron, and he eventually, after many hours, we didn't really have whiskey, but maybe we should have. But eventually,
you had a Zima in your hand.
Eventually, your due diligence will sink in. Sean, you'd mentioned what other would you say downsides, in your opinion, are there of infinite banking?
I'm going to get a little controversial here. Would you mind?
Go for it.
All right. So I would consider myself not just an IBC evangelist, but also I'm pretty draconian when it comes to something that I think has entered into the fray recently that I don't like to see, and I do see it talked about a lot, and that's where. Well, let's bring it this way. When I read Nelson Nash, one of the main concepts that he talks about, that I think if he was still alive, he would be preaching this as well, is that you want to divorce yourself from the banking system because of the fractional reserve banking system that is basically creating money out of thin air through the 10-to-1 leveraging that takes place. You basically put $1,000 in the banking system. The bank can now loan out 9,000, basically created money out of thin air. And so again, IBC or infinite banking allows you to again divorce yourself from the banking system, which is corrupt. He talks about that a lot. He's preached about that a lot, and I believe him. What I see is entering into the IBC framework and talked about, especially in the last couple of years, is using banks to borrow against your whole life policies. And I don't think that's in alignment with what IBC is all about. I think that is going to get yourself more engrossed in the banking sector, and it's actually taking a pure and sound framework like IBC, and it's kind of adding some manure to the mix, to use to not swear on your program. And I find that very frustrating. So that's one thing that I think that I'd like to change over the next couple of years as things evolve. I'd love that people would be more purist about IBC. And I don't mean this to be insulting. I know you guys do talk about this on your show a bit. But yeah, I just feel very strongly that when you're using a bank to shoulder your investments through IBC, you've lost the script, you lost the plot.
You are right. If we get in the weeds with some of the IBC teams, there is a divide on using banks as opposed to policy loans. And great. What's interesting, Sean, and I'm really glad you brought this up. We're actually open to the idea of using banks. And so we've had these discussions. Well, for one, do we want to end the Federal Reserve? I mean, that's one, thought process, but then the other is what is best for the client. And sometimes those two contradict, but believe me, I've gotten in many heated arguments. Like, what's the difference between a policy loan or a loan from a bank? I mean, how does that affect the fractional reserve system? And really, I don't think it does, but it's very interesting. If we could nerd out about the pros and cons of that. And I do wish Nelson could chime in on that, amongst other things, like particularly the use of the IUL. He was
did
very
speak to that. He talked about IULs quite a bit.
Anthony hasn't read his books.
Well, on page 69, it actually, no, not 59, I think. I don't know. It's 19. It's one of the nines. 69 is I can earn a higher rate of return.
Mm-hmm.
But he's very clear that he would never use universal life for infinite banking. And then there's thousands of people out there that are promoting it. Sean, what was the downside of you using and you incorporating infinite banking? What are some of the downsides that you've seen personally?
Well, gosh, I mean, downsides of using IBC. I'm struggling to find a downside. I think that I have all upsides for using IBC. Like I was saying before, the biggest downside to being an IBC practitioner is just constantly having to explain yourself when you're explaining it to other people and how it works. In terms of how I've done it, how I've used it, yeah, I really cannot think of a way in which it has in any way taken opportunities off the table, or, if I'd done it another way in hindsight, would I? The answer is no. I would always and have always done IBC, and I think that it has, if anything, opened up. Well, not if anything, it has opened up far more doors than it has closed, and I don't think it's closed any. Is there a way that you're thinking of that I may be missing? I'm not.
Well, I mean, like, I would have, for me, one thing, I think it would be nice if the premiums were a lot more flexible. You could put in 10 grand or 100 grand or zero. I mean, if the premiums or deposits were extremely flexible.
Well, you should have Tim on. It's like you said, you're going to have him on soon. We get in this debate quite a bit, and he tells me, he surprised me the other day. I said, "Oh, well, here's a scenario, right, Tim? The IBC would not work. And what if I inherited $1 million and I wanted to put that all into a policy?
Mm-hmm.
Now, that policy is going to mech. You can't just put $1 million into a policy as a one lump sum." And he goes, actually, that's untrue. And he explains how there's ways of basically setting up a policy that can take a one time
one and done, we call it.
One and done, and there's ways of structuring policies where it's one size you can put in a decent amount of money up front or have various lump sums along the way. And again, structuring policies can be done, at least according to Tim, very dynamically and always to meet the needs of the client. Whereas before talking to him, I've always been of the opinion that there's mostly due to MEC limits. There's not a lot of flexibility there, but apparently if you're a creative policy designer, and I think Tim is, you can come up with policy designs to meet any need, which I find really interesting. And I also, in my policies, I have a lot of versatility in terms of my premiums. I always design them to make my premiums what I know I can afford on a recurring basis. And then there's always room, should I have a windfall, to be able to, of course, either pay off policy loan or, more importantly, buy up with what Northwestern calls it a lump sum payment. Penn calls it a paid up addition, but they're called different things. But add more money into the policy to basically buy up additional insurance. And those, if a policy is structured correctly, will have room for those sort of mechanisms.
Sean, is there how long ago did you get your first policy?
I got my first policy from Tim about 14 years ago.
Wow.
And
Okay.
it was not IBC. So this was what kind of whet my appetite for, I didn't know anything about whole life. I was a young kid right out of school, and I didn't know much about anything. But I was talking to him. He was selling life insurance at the time. And I got a very basic policy. What do you call it? Your mama's grandma.
Your mama's whole life.
Well
Yeah.
Yeah.
So I got one of those, and even with one of those, I mean, after a couple of years, I saw its potential.
Mm-hmm.
And then again, I got the book, I think given to me by Tim. I read the book. I had my eyes opened, and then I just started gobbling up as many policies as the insurance company would sell me. I got on a first name basis with the health, what do you call her? The
Examiner.
Examiner, yeah. She would come to the house. She actually made house calls, which was great. And she was just like, "Oh, you again?" It's just like, what's going on? Are you dying or something? Why do I have to see you so much? But I'm like, no, I'm just buying a lot of insurance. Then I made sure after the first couple that they were properly structured. I learned how important that was. I think, actually, let me revise my previous point about what the problem is with IBC. I would say that the biggest pitfall of this industry, the IBC industry, quote unquote, is that so few even insurance salespeople understand it and understand how to structure a policy correctly. Even in the IBC world, I find that I've sent policies over to, I'm not going to out them and be mean about it, but I've sent policies over to people I know for a fact are preaching about IBC, and even they don't design the policies correctly. So I find that extremely frustrating. Is like, how hard is, I mean, again, as a simpleton, I'm not in the world developing policies, of course, but how hard is it to just take the concept of make my death benefit as small as possible, make my cash value as high as possible so I can stick as much cash in there as possible and have access to it. This is a very binary sort of ask. And even still, you have policies come back and they're just like, this is terrible. I mean, they should break even after 7 years. That's kind of the, your litmus test. And if they don't, and if they're all over the place, then you've missed something. So I find that very frustrating, and I find it frustrating to constantly have to send policies back to say, see previous email on topic. So that would be a major con that I find in the pro-con list. But hopefully that will improve as more and more people like yourselves get out there and are spreading the good message and are educating individuals about how to ask for these things. I think it can only improve from there.
And that's why they have the Nelson Nash Institute, where agents need to be certified and held accountable and make sure they have some proper training, because it's so difficult for somebody to determine watching a video or seeing something on TikTok to really know how well somebody is in regards to infinite banking. Sean, outside of your first policy, your mama's whole life policy, since you started infinite banking, is there anything you would do different now with your 14 years of experience?
That was a good one. Yeah.
That's a great question. Wow.
It wasn't even on the list. It just came.
I was expecting these kind of questions from Cameron, but.
Dude, that one's gonna sting him.
That's gonna count.
That one is gonna hurt him so bad, Sean. You have no idea. Yeah. Great one.
All right, interview over.
I would say yes. My wife got a policy, and this was recent, 5 years ago or so. And I wish I had looked it over, because going back to what I just, not to repeat myself, but I did not properly vet it. And even though I had explicitly said, and she had explicitly said, highest cash value possible without mecking, lowest death benefits, make that happen. it wasn't designed correctly. And so now Tim's actually helping us have to do either a 1040 exchange into a new policy, even though that's probably a bad idea. So yeah, I would say vigilance would be the one word answer to that. I wish I was more vigilant. I wish I was more educated at an early age about this stuff, about how important it is to properly structure your policy. One more item to add. I didn't think I was going to have a long con list and the pro cons, but one more item in that list in the same vein is that once your policy is designed, there's no going back. That thing's set. It's a contract between both parties. So if it's designed improperly, you find it out years later. Too bad, so sad. You just gotta take your mumps and move on and go get another policy or whatever. There's not a lot of options. I find that frustrating, but again, if you're vigilant about it, you have, you guys looking it over, doing it properly. You have Tim involved. You have, your team. I'm going to pitch you guys all day long about, send your policies to these guys. They'll do it right. I know that for a fact, but it's not necessarily true for everybody. So yeah, I would say that going back, in hindsight being what it is, being more vigilant about all of my policies, I'm sure I could have really fleshed out a lot more of value from all of them. And that's on me.
Well said, Sean. I've mentioned this before on their show, but oftentimes we have a lot of our clients are listening, but we also have new people, right? People are just coming across infinite banking. They're just hearing about this idea and just getting acquainted with it. If someone was looking at infinite banking and maybe on the fence, is there a message that you'd have for them?
Yeah, I would say read the book. It's like, if you're going to be a Christian, you probably need to read the Bible. If you're going to be an IBC practitioner, you want to read the book. Read a book, Becoming Your Own Banker. I'd say the 5th edition is probably the best one to go for. It's by Nelson Nash. It is, it's going to be your Bible, your financial Bible. And to go back to something I said earlier, once you read it, you're going to be transformed. Maybe, or maybe not, but at least I was, and I know everyone that I've given the book to has really transformed their financial lives around. I'd follow that up with, there's other reading on the topic. There's a Case for IBC by Bob Murphy. I'd follow up with that book. As brilliant as Nelson Nash was, he was not a book publisher. I think his book looks very clumsy, and you get it, and you're like, what the heck is this? Sounds like made in Microsoft Word, but the concepts are brilliant. I mean, it's like we truly have stumbled into a universe that very few people have access to or have any interest in, and we've found the the diamond in the rough, of financial insights, and it's on us to take advantage of it. And so I think that people like you're having on the podcast, I'll toot my horn, just say, me included, just like having folks that demonstrate that they're successful with these concepts are going to make them take off more. Because it's one thing to have them touted all day long by insurance salesmen, but that seems very self-serving. But having someone like myself who has no horse in this race other than to just preach the message of IBC, and I'm telling you that it will change your life, I think that will catch on. And I just hope that the message resonates with more people. I hope the message, after it resonates, goes to practitioners like yourself who are doing it correctly and not charlatans. There are a lot of charlatans out there. Another downside of this is that people will say, oh yeah, I do IBC, and then they'll come up with your mama policy for them that puts more money in their pocket and less in their customer's pocket. So that's very frustrating. But yeah, I don't know. Did I answer your question?
Yeah, you did.
You did very
I
well.
ramble sometimes.
No, that was good. Great message. Great response to that one. And man, really appreciate you taking the time out to come on our show and kind of share your experience with infinite banking with our listeners. Thanks, Sean.
Thank you for having me. You guys keep fighting the good fight and do what you do. I appreciate it.
Go make it a fantastic day.
Take care.
If you like this video, I know you're like this one. And if you want to learn how investors use infinite banking to increase their returns and lower their taxes, check this out. And if you have some questions and want to see if infinite banking is for you, hop on a discovery call with us. Link for that will be in the description.